It is the weekend. We're taking a look at the S&P 500 to get us started for Monday, June 10th, 2019, June week 2. As we get to the end of this coming week, we get to the rollover of the ES contract. So sometimes we see some wild swings. We already saw a huge wild swing last week, touching down to a huge swing low and rallying back about 160 points off of that low. So that's a pretty wild swing. And there might be one more shoe to drop. So let's just take a look at what needs to hold and what will clue us in to find out which way that's going to keep swinging, if we're going to keep going up or if we're going to pull back from here. Here's our monthly S&P 500 chart. This was the main theme of last week's video. Here is June so far. What a crazy candle that's printed just in 1 week. Here was May. The big death knell for May was when it crossed down below the open, the bottom of the April candle. That was at 28.48. And we literally just a little bit more than doubled down the month from there. So now here we are, we've crossed back above that level. So I think that as long as this level keeps holding now on a closing basis, the path of least resistance is going to be to keep going up. If they drop it down below this level and we close below it, I have the feeling if they drop it down below this level, they'll probably flush it down a bit, and we will at least get one close under our belts. But if we don't come back the next day, trade back above it, and close back above it, then maybe we're going to be testing down deeper. Okay? So that's the monthly view. That's the simplest way to look at it. Let's look at it from the daily standpoint and what could be our triggers in between from where we're at now. Okay, so Friday we came in, we rallied all the way up to almost 28.85. 28.84.97 was the high. This high came from let's just get in a little closer here. This high came started from a takeout of the 50-day simple moving average, a move well above it, but then there was some selling at the end of the day, but we still managed to pull off a close above the 50-day simple moving average. The stuff at the end of the day was probably some hand-wringing and worrying over whether Trump would, put those tariffs on Mexico. And I did read in the news and through Twitter that he quote unquote, maybe that is, the clue that we're going to come in and we're going to continue strong, or at least stay up here in staying above the 50-day simple moving average. As soon as we start to trade below that, there's probably going to be some stops that get set off, and we'll be looking to hold above Friday's low. As long as we hold above Friday's low was at 28.52, so that gives us some cushion to stay above that 28.48 to 28.50 area that I just showed you from the monthly chart. If we get below that, then we get sucked into this gap that's below us here to Thursday's close. The halfway back point for the second quarter now, using this brand new low that we just put in this week, all the way back up to the all-time high, which you can't see here, but it's right up here on the 1st of May. Halfway back point for that is 28.41. So that's right down here just below Thursday's close of 28.43. I got to fix this type here. This just says 284. It's 28.43.49. So worst case scenario needs to be that if we just fill in this gap and then we circle back up and we try to retake the 50-day simple moving average. If we come in, we break the 50-day, we break Friday's low, we fill this gap and fall down below this 28.41 level, we're in for a deeper bit of a pullback. We have our 20-day simple moving average hooking around and coming up. Price might catch and hold on that. You have to just look and see where that is. Mark it on your look at where it is on a daily chart. Mark it on your intraday chart or whatever it is you use. A piece of paper, if you write down levels on a piece of paper and just sort of watch them that way. Write down where this 20-day is. If that doesn't hold, then we've got the halfway back for the whole month of June, which is basically the range that we set last week. Here's the low for June. Here's the high for June. The halfway back point for that is 28.06. That's very close to holding the 2800 handle. And as you can see, it sits here right between this 100-day and 10-day simple moving average combo. If this were to break, then they're going for a full-on back test, possibly, of the low that we set last week. And here's a ginormous gap sitting down here that's left unfilled. From Tuesday's low, open and low, back to Monday's close. So those are your levels to the downside. We're either going to have No move below the 50-day simple moving average. If we move below the 50-day, we look to hold above Friday's low. If we move below Friday's low, we fill in this gap to Thursday's close, and we hold on to the halfway back for the quarter. If we stay above that halfway back for the quarter, if we stay above 28.50, that means we're above that monthly level. That means we're destined to get our way back to the all-time high. If we break below 28.50, I bet you that I bet you we're going to get one of those swings that have to do with ES contract rollover, and we're just going to go on down the line here and test things. 20-day simple moving average, halfway back point, and these two simple moving averages on down to the 200-day simple moving average, and as far down as to just filling this gap back here to Monday's close. Okay, I'm just going to leave you with that, and I'm going to post these two charts along with this video and keep it simple. Hope this helps you out. I'm only going to be around and on the thread until around the European close on Monday, but I'll be back on my regular schedule Tuesday, Wednesday, Thursday, Friday of next week. That's it. Have a good rest of your weekend, and see you Sunday night when those futures open.